first of all, I think for operator in China like us, we operate in 1,900 cities in China. We are very committed to China because the consumer demand for our food and for our service is there in the very long term. In the long term, because it's a big country with the population, everything. But in the short term, there are a few things that are, I think, quite well understood. One is consumers' consumption is quite rational, not difficult to understand because last year, about the same time, China started to open up after 3 years pandemic. So, people really went through some difficult time and then become more rational because 3 years, you learn not to buy things that you actually don't need, right? Quite easy to understand. So for us, we are flexible. We respond to customer need, and we open up the price range so that we can go to lower tier city and have more business coming in. And that's the reason why we can see.
But if I can ask you, Joey, does that do those promotions, do those discounting, does the special offers, what does that mean for margin compression going forward?
Well, if you look at our business result this year, despite all these concerns, we actually achieved record sales, record profit, and record new store opening for the last quarter. And year to date is record sales, record profit, and record new store opening for the year to date. We made USD 1 billion so far profit already.
So you are looking at the long term, and you are still committing capital to expanding in China.
Absolutely. If we look at 2024, which is something sort of people should be interested about, we just have our Investor Day in Xi'an back to middle of September. We actually gave guidance or commitment to our shareholder investor, not only for 2024, but 2025 and 2026. So our commitment, the big commitment is within these 3 years, we're going to expand from currently about 14,000 stores to 20,000 stores by 2026. At the same time, we're going to return US $3 billion to shareholders through dividend and share buyback. And specifically, what does that mean to investors is one is high single digit to double digit in system sales growth, which is composed of same store sales and new unit growth. Second, high single digit to double digit operating profit growth. Third, double digit EPS growth. So it's a quite aggressive target, but we are ready. We've been working hard to get ourselves ready in the last 10 years, from turning around KFC in China, turning around Pizza Hut in China, and then 3 years pandemic, and our team is ready.
Joey, we're almost closing off this year. I wanted to ask you, are you still on track to open 1,300 new stores, possibly even more, in 2023?
Definitely more than 1,300 stores. So we are still bringing in incremental sales, incremental profit when we open these stores, expanding the market share. Most importantly, whatever number the store that we are opening, we are committed. We have been doing it for last many years, by the way. 2 years payback for KFC, 3 years payback for Pizza Hut, because quality is far more important than the number of stores. We can adjust the store, but we want to make sure that we open high quality store. Otherwise, we'll slow down.
How is AI improving productivity and the workflow? Implications for staffing as well are very important, and ultimately, where does this leave the outlook for margins?
Very, very good question. Whatever we are doing, we try to protect the margin. So for the AI, we've been working hard on it for the last 6-7 years, actually. It's a multiple year project. It's a big investment. And to have a sense of the result, 6-7 years ago, we have about 7,000 stores. We hire 450,000 people because 90% of our stores are equity stores. These staff are on our payroll. We run this store. We have very small franchisee business. And now we have over 14,000 stores, and our staff number moved from 450,000 to 430,000. So that is a direct result, well, to a great extent, a result of digitization and automation, because AI, digitization, automation, it streamlined the workforce. The process, and it takes away a lot of admin work, repetitive work, so our staff are a lot more productive. And that's the way that we make sure we continue to pay our staff at competitive rate and deliver good service.
Joey, final question. Xi Jinping and President Biden are meeting in San Francisco. We cannot ignore the geopolitics. Is there any evidence of boycotts or pushback or resistance to U.S. brands? Because under your umbrella, there's KFC, there's Pizza Hut, there's Taco Bell. These are U.S. brands par excellence.
To say that not at all.
Right.
We have been in China for 36 years.
Yes.
And in the last few years, despite all these concerns, we are part of the community. And we shall not underestimate the maturity of Chinese consumer. I think in our industry, there are quite a few international brands. And then in other industry, the shoe industry, the coffee industry, the clothing industry, and the electronic industry, there are many international brands are doing exceptionally well. What Chinese consumers are looking for is good quality, good value for money, good experience. I mean, and then we are part of the community. So therefore, we are so committed to China still, and we are here there to stay.